there is always an underpinning of financial success, right? Whether that's an EBITDA or an operating income, net income metric, there is always a definition of profitability built into these programs. There tends to be a second or third measure that are specific to a company, whether that's top line growth, margin, or some sort of cash flow metric, whether conversion or in absolute dollars. So there's usually this alignment between profitability and then operational success in some other notion. But then it's important for companies to unpack that a little bit and say, how do each person and how do all these divisions and all these business units and teams contribute to the success? And so part of that is in the communication side, right? How do you in your individual job contribute to the success of the organization? And the other is then pulling out a piece of the annual or short-term incentive tied to things that really are aligned more closely with an individual's efforts and results. So that can include things at the corporate level, like strategic priorities. I usually think that those are things, Ryan, that you have to accomplish in the next 12 months to be successful longer term, but it doesn't necessarily manifest itself into more profit. In fact, many times that takes investment and actually hurts your operating income line in the near term to create more value in the long term. Those can be things like in any year, a cost reduction program. That could be a focus on safety in a current year. That could be a focus on inventory management if that's a significant problem. Or it could be any number of things that align to a longer term strategy, but are the building blocks of this year as a part of a longer 3 or 5 year strategy.